Welcome to Explain the Charts. Today we'll be analyzing the S&P 500, specifically the SPY ETF, and seeing if the news and chart data align on a potential breakout. The latest news surrounding the S&P 500 is a mixed bag, with earnings reports from major tech companies like Alphabet driving optimism, while the labor market is showing signs of weakening. Job openings have fallen to their lowest level since early 2021, suggesting a potential slowdown in the economy. The Federal Reserve's 2% inflation target is being closely monitored as the third-quarter GDP data is released today, including inflation data. Investors are also keeping an eye on the upcoming U.S. election and the potential impact of a Trump presidency. While some analysts believe a Trump presidency could lead to increased capital spending and a bullish run for the stock market, others are cautious about the potential volatility. There are also concerns about the U.S. government's fiscal budget, which is expected to include tax rises and spending cuts. Looking at the daily chart of SPY, we see that the price action has been consolidating in a range over the past few weeks. The price has been bouncing between the 50-day moving average and the 200-day moving average, with the 200-day moving average acting as a key support level. However, the recent earnings reports and the potential for a Trump presidency have injected some bullish sentiment into the market. This is reflected in the upward trend of SPY in recent days. The price is currently testing the upper boundary of the consolidation range. If the price breaks above this level, it could signal a bullish breakout and a continuation of the upward trend. Let's zoom in on the 1-hour chart to get a closer look at the recent price action. The 1-hour chart shows that SPY has been trending upwards in recent days, breaking above the 50-day moving average and the 200-day moving average. The price is currently trading above the 50-day moving average and the 200-day moving average, indicating a strong bullish momentum. The Relative Strength Index, RSI, is also showing signs of bullish momentum as it is above the 50 level. We'll now look at the 15-minute chart to see if there are any short-term trading opportunities. This timeframe reveals that SPY has been experiencing short-term volatility, with price swings of a few points. The price is currently in a consolidation range between 580.50 and 581.50, which could be a good opportunity for short-term traders. If the price breaks above 581.50, it could signal a short-term bullish breakout and a good time to buy. Now, let's bring it all together and recap the important price levels. The 200-day moving average, around 579.50, is a key support level for SPY on the daily chart. The 50-day moving average, around 580.50, is another important support level on the 1-hour chart. The 581.50 level on the 15-minute chart could be a good opportunity for short-term traders to enter a long position. If the price breaks above the upper boundary of the consolidation range on the daily chart, it could signal a bullish breakout and a continuation of the upward trend. On the other hand, if the price breaks below the 200-day moving average on the daily chart, it could signal a bearish reversal. Short-term traders should also watch for a break below the 580.50 level on the 1-hour chart, which could signal a short-term bearish reversal. Overall, the bullish momentum in SPY is strong, but there are some potential bearish risks that traders should be aware of. Keep an eye on the news and economic data releases, especially the third-quarter GDP report and the upcoming U.S. election, as they could significantly impact SPY's price action. Be sure to always do your own research and consult with a financial advisor before making any investment decisions.